Hello, welcome to the First Business Rescue podcast. My name is Chris Worden. I'm from First Business Rescue, and our mission here is to help UK directors understand what can be a really complex world of UK corporate insolvency. Now, these podcasts are not about me and what I've got to say. Every couple of weeks, we are going to bring in someone who we class as an expert in a certain field that hopefully is going to answer some of the questions that you've got on your mind right now. And today, we're going to be inviting into the studio Gary Whitehead of AFT Assist. We've worked with Gary a number of times over the years, and we class him as one of our extended team. He's provided a tremendous service, not just to us at First Business Rescue, but to many clients up and down the country. Now, Gary specializes in debt reduction, challenging personal guarantees, debt settlements. So today's podcast is all about what happens to my personal guarantee if I go into liquidation. So without further ado, I'd like to welcome Gary to the First Business Rescue podcast. I know how busy you are, mate. Thank you for taking some time to speak to us today.
No problem at all, Chris. It's great to be here, pal.
Top man. Gary, I mean, I know your background. You forgot more than a lot of people know about personal guarantees. But where did it all start for you, mate? Because you've not done this all your life, have you? You used to have a different day job some years ago.
Yeah, for my sins, Chris, as you know, I spent best part of 20 years with Barclays. Joined Barclays in the early 80s, perhaps the end of old style banking when they trained you very well. Spent part of 20 years there, left in 2001, set up a lending business myself then, which did fantastically well until the financial crisis. And then I was very much on the receiving end, and the difficulties I had, and I thought I knew what I was doing, sort of led me to think about what we could do to perhaps give some of my experience back to people who are also experienced those difficulties, who've got nobody else to turn to. And that's the reason why we set up AFT, to help those businesses that get into financial difficulties, and mainly in the area of personal guarantees.
Perfect. And what other services do you provide over at AFT, Gary?
Well, the vast majority is personal guarantee work, Chris. I mean, it is feasible. We do other things such as, helping people with overdrawn directors' loan accounts and things along those lines. But 99% of what we do is helping directors with a personal guarantee liability when the company has had to go into some form of insolvency.
Perfect. And that's a question on a lot of my viewers and listeners' lips is, our audience is predominantly small to medium-sized businesses in the UK. They follow us, or they've made an inquiry with us because they've got some debt problems. That it was 2 years today. We're recording this on the 23rd of March that we shut our office. And over the last 2 years, you just couldn't make it up, could you? We had COVID. It took so much longer to get back to work. Nobody was expecting this to last as long as it did. Inevitably now, we're seeing a lot of businesses of all sizes, seeking insolvency advice because, quite simply, they've not bounced back. Some sectors have been hit a lot harder than others, but I think everybody's felt the pinch, and they're going to continue to feel the pinch because, as we record this, today's the budget from the Chancellor. Inflation is raging. Energy prices are going through the roof. There's fears of a global recession. So whether you're, on the precipice now of insolvency, or you're thinking about what might happen in the future, if you've signed a personal guarantee, that's the thing that keeps people awake at night, in my experience. So, Gary, let me ask you the question. There are people watching this and listening in that have signed a personal guarantee, be it Funding Circle, iWalker, Capital on Tap, the banks with an overdraft. Talk to us. what's going to happen if they go into a liquidation, and how may they be able to deal with it?
Well, I think the first thing I do want to say is that, if seeking professional help is always a good start, because there are things that can be done to alleviate the problem. Now, the harsh reality is when a company does go into insolvency, then the personal guarantees are crystallised, and the likelihood is that the lender is going to make what they call a formal demand on the director to get their money back. And that means that if the guarantee was, let's say, for £50,000, then the demand will be to pay that £50,000 back almost immediately.
Mm-hmm.
And our job, which we look to bring that situation, which is what you would say is outside of a director's control, because it's very unlikely they've got £50,000 to pay to the bank or to the lender immediately, back within their control. And there's two real areas that we look at. One is trying to reduce that figure down to a manageable amount that they could afford to pay, or the other option is to reschedule that debt over a long period of time where they could afford to make the monthly payments. So one involves debt forgiveness, one involves a long-term payment approach. But the key aspect is it brings it back within the control of the director. That's the fundamental priority. And again, I just want to stress to anybody that's listening out there is that I can totally understand, because I've been there myself, that when a company is struggling, personal guarantees are on the forefront of every director's mind, because that's the one that can impact upon them personally the quickest. And there is help out there. We can try and find a solution for you. Don't know what that solution looked like, because every case is different. But the earlier you can get help, the more options you've generally got. So if there's anything more that we can give to anybody today, it's just say to them, please don't worry, there are options available.
I mean, I'm going to share my experience. So obviously, for people that don't know, I ended up in insolvency, the industry, because I had to suffer a liquidation some years ago. And, I was a rabbit trapped in the headlights. I didn't believe that there was enough advice out there for the average Joe on the street. And actually, that's what spurred us on to set up First Business Rescue. But when I liquidated my business, I actually had an overdraft with Lloyd's at the time, and it was a personally guaranteed overdraft for £25,000. And that frightened me to death. So Gary, there'll be lots of people on this webinar and podcast today. What advice would you give to somebody who has a personally guaranteed overdraft and is facing liquidation?
Well, the first thing I would say to anybody that's facing this particular problem is don't bury your head in the sand. That is probably the worst thing you can do, because if for any lender, if they don't know what's going on, they're going to think the worst. And that's not just in relation to the company, but in relation to a personal guarantee as well. And you're in effect just giving the onus to the lender to do what they want to do. So I would always seek professional help if you can, and if you can't, please don't bury your head in the sand, because that would just leave a lender to think the worst and take action, which is not in the best interest of anybody, to be perfectly honest.
Yeah, I mean, let's be right here. The banks just want the money, don't they?
Any lender just, when a company goes into insolvency, all they want to do is get the money back and walk off. They don't really want, something that protracted. But sometimes it's not always feasible for a director to pay any amount up front, even if we could reduce the debt. In which case, we have to work with what the director can afford. And so, if that means that they can only afford so much per month, then we have to persuade the lender to accept so much per month as a resolution to getting their money back.
And I echo your sentiments. Whether it's owing the HMRC money and you're still in trading, or you're getting creditor pressure, it's those that don't do anything at all. They use the ostrich method, bury their head in the sand, thinking things will go away. the key advice here is to take professional advice as early as you can. And I do believe the earlier you deal with something, the more options that are available to people.
Yeah, no, I totally agree with that. I think the problem with surrounding things like personal guarantees is that people probably don't even realise there's people like AFT out there that could potentially help them. So even if they wanted to find professional help, they might not be able to do so.
Gary, I wish I'd have known you back in the day when I had to place my company into liquidation. Because I buried my head in the sand. I didn't know what to do. And the chap I was working with, he got better advice than me. And he ended up offering them like a really minimal amount. And we were joint and several at the time. So the bank took his minimal amount and I ended up having to pay like 90% of it. So, and I mean, I can laugh about it now. I wasn't laughing about it at the time, but I think that just shows how, I didn't know what I didn't know. And I'd have been a lot better off if I'd have bumped into you, Gary. And that's why we're really happy to refer. I think it can be rare in business. A lot of people promise a lot and deliver not so much. Gary, there's a lot of. Am I allowed to mention specific lenders on this, or will that get me in trouble?
I think it would be better to avoid using specific lenders, but
okay. Right. Well, listen, if you're watching this, there are certain lenders who've been lending very, very irresponsibly, and they circle you through the nose for the rates. Running circle. I hope that one didn't. I don't want to say the names, right? But there are certain lenders out there, and they've got a lot of our customers very, very, very worried. And you know what lenders we're talking about, Gary, because we deal with them on a daily basis. What's the advice and what are the potential solutions if you've taken a secured loan with one of these institutions where you've signed a personal guarantee? What are the options available? And again, how would you deal with that?
Well, one of the things I have to say is that every case is different. There's no sort of, one size fits all. There's no sort of rule book that you have to adopt. Every case is different because everybody's personal circumstances are different. And as part of what we do, we do investigate and review the lending to see if there's been any issues or mistakes or things that we can use to our advantage in terms of finding a solution for a client. But typically the solutions, I think I mentioned before, tend to fall into two categories. One, where we try and reduce the debt from, let's say, 50,000 to 20,000 or whatever the figure may be. Mm-hmm. But that generally requires the director to have a lump sum of cash available to be able to pay to the lender fairly quickly. Mm-hmm. If that's not possible, then we would revert back to restructuring the debt over a long period of time based on affordability. And that doesn't necessarily mean that affordability needs to be pretty strong on day one, because the director, by the very nature of the problems they're experiencing, have probably not got a very strong income at the moment because the business is struggling or is about to go into insolvency. They may be starting again, in which case they're going to need some time to build up the new business before they can take a sensible income, or they might be looking for another job. So it is possible to structure payment plans which are fairly modest in the early days, but then could increase in due course as the person's situation improves. And that's important, because if you've got using a £50,000 figure as an example, if you can only afford £100 today, that's all you can afford today. But a lender is not realistically going to allow you to pay £50,000 at £100 a month, because you'd be here till you're 157 paying the thing off. So we've got to find it's always finding a solution that the director can afford and the lender can live with, and we've got to make sure that it fits both camps, because if it doesn't, either the director won't agree to it or the lender won't agree to it.
Okay. And I suppose we've got to it would be unfair not to mention the severity of a personal guarantee, because if ultimately what would happen if you, like you say, the lender or the borrower don't agree terms, where does that end up, Gary?
Okay, well, I mean, you're right. We have to mention that the personal guarantees can be quite severe in terms of the impact upon a director. There's normally two routes that a lender can go down. One is issuing what you call a statutory demand, which is start of bankruptcy proceedings. It's not generally the best route for recovery for a lender, but it's the one that puts the most pressure on the director immediately. And that means if the director doesn't do something very quickly, they could face themselves going to court to be declared bankrupt, and the resultant implications that can have on personal assets. The other more traditional route for a lender to go down is through the county court judgment route, issuing a debt claim through the courts. Now, that does mean that the lender has more options in terms of at its disposal, in terms of either securing the debt, because personal guarantees are not immediately linked to your house, but if the lender goes to court, they can get what you call a charging order to support the guarantee, whether the director agrees to it or not. And there's a lot of other options that they can do then in terms of enforcing the debt. When we help people in either circumstances, if we can find some potential problems, we will then obviously help them via perhaps a solicitor, one from our panel, to put in a defence or perhaps a set-aside application, so to delay the process. And that allows us to carry on with negotiations with the lender, because our job is always to find a sensible solution. It's not to fight matters in court, but if the lender does do something along those lines, we can't just ignore it. The director has to do something about it. But again, I stress, our job is to find a sensible solution that the director can afford and the lender can live with. And 9 times out of 10, there is something there that we can sort out. And that's what the key thing here is, Chris. In most cases, we can find a solution. Perfect. So
obviously the advice we're giving out there, if you've got a personal guarantee, if you're worried about business debts, it's one thing getting advice on how to deal with the business debts, but if a personal guarantee is coming in after that, it's really important that you have a strategy to deal with that also. Gary, I'd like, if we could, to sort of wrap up this podcast with you telling us a few success stories, because I know, countless of clients that we've introduced you to, where they've had astonishing success in, dealing with these personal guarantees. I know you don't want to mention the lender. I know you won't be able to mention the client, but could you give, a few examples of what you did and where it left the customer after you did it?
Yeah, I mean, one was one of your clients, Chris. It was a guy that had, I think it was a couple of bar stroke restaurants, and obviously because of the impact of COVID, it was they had struggled, but they wanted to, in effect, start again, and so they liquidated the company via yourselves. They came to us with regard to a personal guarantee that they've got some finance linked to credit cards, I think, from memory. Somewhere in the region of 60 or 70,000 pounds per potential personal guarantee. And the problem was then that if they'd used all the money that they had to pay those guarantees, they would not have been able to restart the businesses again. So we got involved. Took us best part of somewhere between 4 to 6 months to sort things out, but we got that £70,000 liability down to 15.
Fantastic.
And that meant that they had the available resources to be able to set up again in business, and it was a fantastic result from their point of view. And of course, but I'll mention it, Chris, that the vast majority of our fees are based on success. So if we don't find a solution for a client, we don't get paid. So to find somebody that's got the expertise and is willing to help people in difficulty, like directors with personal guarantees, and to do it on almost like on a no-win, no-fee basis, is very difficult. So yes, we certainly help people with pressure, in dealing with pressure whilst they do go through the process, but to do it on that basis as well is a very much most directors are very welcome of that, because of they're not in the best of financial health when they come to us. But going back to other cases, let's talk about another couple of cases, Chris.
Just before we do, just to sum up that was somebody with 70,000. They've gone into liquidation. The weeks after, they've got £70,000 worth of demands that they've personally guaranteed. You just imagine where that person was. And then Gary's team have gone in and got that down to £15,000 and given him 8 months breathing space. Is that about right, Gary?
I think it was somewhere around that, somewhere around 6 to 8 months to sort it all out.
I remember the client's world was falling in, so again, something that seems so catastrophic, there are solutions available. And I love the fact that you're willing to put your neck on the line, and you don't take a job on if you don't think that there's something to do, and you're willing to put yourself at risk, and I don't know many professionals who do that. They want money mainly up front, and if we win, we win. If we don't, we don't. So I think that's testament to your service as well, mate. Please go on. Sorry for interrupting you there.
Yeah, no, you're absolutely right. I don't believe in what we do that you should get paid whether you win, lose, or draw, if you know what I mean. I think you should get well paid if you succeed, but get very little if you don't. But I mean, let me give you another. Obviously, that client came to us fairly early doors, Chris. I think from memory, you put it in contact them when you initially spoke to them. But I've got another example where they came to us very late in the process, which I suppose highlights that it's never too late to try and find a solution. And this was a client who'd come to us whereby the lender had already taken them to court. They'd already got judgment. They'd got a charging order on the house, and they were threatening to apply back to court to force him to sell it. And obviously he came to us in an absolute panic. And unfortunately, he buried his head in the sand, to be perfectly honest. That's what happened. And so his main priority was to get the lender now to stop the threats, if you like, to force him to sell his house and get this restructured onto some sort of sensible payment arrangement. Obviously, he was still not struggling, but he wasn't still on the income that he was prior to the insolvency, but he did have something left each month. Mm-hmm. The debt in this case was about 30 to 40,000 from memory. And what we managed to get the lender to back off. We got them to accept initial payments in the region of £200 to £300 a month. But we also agreed that every 6 or 12 months, there would be a review of the circumstances of the director. And if they were earning more money, then they would commit to increasing the payments. Mm-hmm. But we also got the commitment that if they weren't, the payments had to carry on at the level he could afford. Mm-hmm. And that's a classic example there of making sure, there is no point in trying to agree a payment plan that meets the lender's requirements that the client can't afford from day one, because it's just going to get them into more and more problems. So it was creating the right environment that gives the lender the security that it wants, which is that there will be reviews and it's not going to take 50, 60 years to pay this debt, whilst also giving the protection to the director that it's got to be affordable from day one. So there's two sides of the coin. One was the debt reduction and one was the payment plan. It is feasible to try and do both, but that is, the more time people want to pay, the less likely they're going to get anything significant off the debt. It's not always one or the other, but in the vast majority of cases, we have to try and decide which is our preference, and that's based on what the director can afford to pay.
Gary, I just want to thank you for joining us today, and we're coming towards the end of the podcast now. So I'd like to, thank you for joining us. But if I can you just sum up in 3 bullet points, no more, what people need to do if they are worried about personal guarantees after they go into an insolvency procedure.
First and foremost, number one priority, don't ignore the position.
Mm-hmm.
Seek professional help, preferably, but if you can't, don't just ignore the position. So that's the fundamental priority. The other thing I would say to anybody, and just to reiterate, is that it may feel like the end of the world, but there is help out there, and there are solutions that can make the difference to the directors in terms of giving them a way forward, almost like giving them some light at the end of the tunnel. So, please don't think that there's nothing else you can do. We know it's a stressful time. We can help reduce some of that stress during the process, and as I think you said before, 9 out of 10 cases we can generally find a solution that works for the director and the lender can live with.
Thanks, Gary. And finally, mate, if people want to know more about Gary Whitehead, where do they find out about you?
Please feel free to have a look at our website, just aftassist.com. Speak to Chris if you know Chris, because he'll put you in contact with me. You can also ring me direct. Are we giving mobile numbers out, Chris, or do you want to do that too?
Mate, please give your mobile number out. I mean, it's going out everywhere here, Gary. I can't guarantee who's going to be ringing you. If you want to put your mobile out live on YouTube, LinkedIn, Facebook, and the like, knock yourself out, mate.
Well, look, I mean, always contact me. You can contact me by email at gary@aftassist.com. And please, there's no issue about ringing me. My mobile is 0776 416 7530.
But by the way, Gary, we have a big listener base in Germany. So
I don't speak German.
No, well, generally, when we look at who listens to our podcast, we have a lot of people in Germany listening to it. So this is just for UK personal guarantees. I take it, just to add on to.
It's just UK personal guarantees. There's a slightly different legal system up in Scotland, but we still do have clients in Scotland as well. But it's definitely only UK.
Top man. Guys, thank you for joining us. We hope that you found this useful. Wherever you're watching this video or listening to this podcast, please engage with it. And if there's a subject that you want us to answer at First Business Rescue, please let us know. You can follow us, Chris Worden, over at LinkedIn, First Business Rescue over at YouTube, First Business Rescue on Insta, and First Business Rescue on Facebook. Thank you very, very much. Have a wonderful day, and we will see you soon.